And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And as always, it's with an eye toward helping you formulate a plan going into next week and beyond. We're all about sharing with you where the current strength is in the markets. And of course, you want to know that so that you can capitalize on that. So we're going to talk about quite a bit here today. It's been kind of a wishy-washy week. I just have no other term for it. But as usual, we're going to go ahead and take a look at, of course, the current markets. Where are the broader markets? What can we look forward to? And then from there, I am going to share with you various areas of the market that are outperforming, and they're beginning to have potential turnarounds, or they've been in uptrends. But really, the markets, they are very fractured, if you will, for lack of a better word. There are stocks within these various groups that I call the haves. Technically, they're very sound. And then there are the have-nots. The purpose here is to help you discern whether your stock is what I call a have, poised for more upside, or a have not that has more work to do. So from here, I'm going to share with you an area that has been perked up last week, but more markedly this week. It's an area where the government is pledging to put new money. I know that Biden has been talking about different areas, but this one is coming to life this week. And of course, we'll look at underlying stocks within that. Also, the reopening play. And I know that that's an area, if you go back to November when the vaccine was first announced, we saw a lot of areas pop into favor, but there are newer areas as this reopening continues to take shape. So we're going to take a look at that. Let's go ahead. As always, we want to see, I'm going to share with you some headline news this week that was impactful. Again, always with an eye toward preparing you going forward. We did see a very significant jump in oil prices this week. They're now trading above $71. And for those of you that follow my MEM Edge, certainly subscribers to my report, you'll know that we have been following this oil price movement going back to November in that $45 range. We've been able to capitalize on this increased improvement, and pretty dramatic this week. OPEC, those oil producing countries, they did get together, decided to keep those production levels relatively low. They are going to increase them, but judiciously. So that was good news. OPEC also cited the increased oil usage. So lots of bullishness going on there. We'll take a look at that energy chart and then some underlying stocks. Also, US manufacturing, it did rise. They are seeing a tremendousness in the way of new orders for manufacturing, cars, computers, furniture. Unfortunately, there is another side to that, and that is supply and labor related. They're not able to keep up with demand, but certainly we are seeing a rapid improvement in the economy. Unemployment claims, they did fall to that 400,000 level. So we are now at a new pandemic low for unemployment. That came out yesterday. Again, good news for an economy that is really turning around rapidly. Also today, we did get numbers as to the employment rate, if you will, for May. And I'm trying to think what I'm saying here, but generally we did see a pickup in, I'm sorry, May employment numbers increased is what I'm trying to say, but they actually were lower than expected. It was a very mixed market, but at the end of the day, it was received bullishly as it relates to inflation. I'm sure many of you know that's been a real hot button in the markets of late. So this mixed report was viewed positively. Hence, we did get a nice move into technology. We're going to get into that, of course. And then next week, we have the Consumer Price Index and Core CPI. Mark your calendars. That's June 10th. And this is a very widely, closely watched. The Fed uses these numbers to gauge inflation. So we're not out of the woods yet with those inflation fears. And then June consumer sentiment data is going to come out on Friday. There were other numbers due to be released next week, but not any that were as relevant because June, this is going to be that first preliminary number, and certainly also keying in on whether the consumer still has uh, certainly positive sentiment as far as spending. So let's go ahead without further ado, take a look at the S&P 500. This is a daily price chart. So the S&P was up a little more than a half of a percent this week. So we are inching, we are a hair away from this prior high that was reached at the beginning of last month. The relevance here is that until we get above that prior high, this is viewed as resistance. So a nice break above that would be quite bullish. Outside of that, we have our nice momentum indicators, your RSI trending upward above that net neutral 50. And then stochastics, another momentum indicator, equally bullish heading north. It is a little bit overbought. That's when the stochastics get up here above 80, but we can see historically that it can retain a presence up there, so not overly concerning. From here, we want to go ahead and take a look at the underlying sectors within the S&P 500. Again, always with an eye toward staying on top of where that relative outperformance is, where is that strength, and then again, of course, how you can from there go ahead and take advantage of that. So we have these 11 sectors listed here. This is a 2-month daily price chart, very easily accessible on stockcharts.com, that first page there. And I've gone ahead and added an RSI indicator descending. I'm going to go ahead and update that so we have the latest, greatest as far as this currently week. And it also does take into account activity beyond this week, but it will have an impact. So first up, we can see that real estate stocks really picked up, and they were up 3%. That's relative to the broader markets that were up about a half of a percent. So very, very significant outperformance here. This is what I talked about earlier as far as the recovery play. A lot of these REITs, I'm going to share with you a couple of outstanding stocks within here, but they are going to be office building, apartment, malls, and so forth. Again, all about the reopening, the ability, particularly with unemployment numbers being positive, the real estate, the REITs that deal with either home real estate or apartment rentals are really seeing a nice uptick here. So that's certainly one of the stronger areas. From here, we can take a look at financial and energy. Now, outside of XLP, of course, is consumer staples, but we can see that industrials are up here in the forefront. So net, it is a bit mixed, but overall, we are still seeing these cyclical areas up here in the forefront. Let's just take a quick look here at the energy chart, and we can see it had a nice breakout subsequent to that Tuesday OPEC meeting release. Very constructive for the group. And then from here, of course, you always want to be equally tuned into where the relative underperformance is. Let's take a quick look here at healthcare. This dip here has everything to do with some of the large pharmas. I know Abbott came out, they talked about the fact that they lowered their expected earnings growth numbers because COVID testing needs are subsiding. So that did hit certainly a select area, but we were able to find support and bounce off of here. In my MEM Edge report, I'm going to report or share with you the outperformance, what this strength here is all about, and what we're going to be on the lookout for there as it relates to healthcare. And then also we can see consumer discretionary. Now that's an area that is continuing to find it difficult to get off the mat, if you will. This drop here was everything to do with the consumer price index index report back here where inflation and consumer prices, they increased a significant amount. So the fear, if you will, is that consumers may push back because of this increased pricing. So this area is continuing to lag. A lot of these restaurants, they're finding it difficult to garner employees. They are raising their prices to offset labor costs. So a lot of dynamics in place there as it relates to discretionary. So from here, of course, we want to drill down and take it even further as far as peeking behind the curtain, looking for that relative outperformance, and then also being tuned in and up to date with those areas that are underperforming. So here we are, front and center. Crude oil, and it's just a thing of beauty here where it's breaking out of that above that 71 level to near-term highs. Let's go ahead and take a look. I'll share with you a longer term view. We can see that we're not quite above these super high levels in 2018, but really significant. And this has just been really interesting to witness and be a part of. We have a couple of stocks here that are up triple digit from my MEM Edge report when we picked up on this move into oil, and other more recent ads that definitely have further upside. So if you haven't, go ahead and take a look at that MEM Edge report. You can trial it using the link below. So from here, of course, looking at those underlying industry groupings, let's take a look. Semiconductors, they did have a great day today, up 2.5%. This was that move into technology that I talked about as inflation fears are seemingly being pushed to the side. So nice uptick here in semis. I believe I do have some names there that we're going to look at because very similar to other areas, it's not all stocks are not created equal. We're in a bit of an unusual period where investors are grappling with this historically unprecedented period in the markets. When you think that we're coming out of this major shutdown of the economy, we're seeing rapid growth. So it really is an unknown. So with that, we're not seeing these trends. Any of you that are experiencing a little bit of difficulty as far as making significant headway, please know you're not alone. It's been certainly dicey, and we're not really seeing all ships, all boats are not rising as we see groups come into favor. So here we are, prime example, software, IGV, technology software, also posting a nice 2% gain today. But you can see it's been really bouncy, not the easiest of market environments, but turning positive. And then from here, we can drill down here. I do want to share with you a very significant chart for this week and certainly for today. This is the yield on the 10-year Treasury. And we can go back to this period where interest rates were rising very swiftly, really a bit of a death knell for technology back then. And interestingly, in addition to just leveling off, they do appear to be lowering the 10-year yield. So that's where people are taking that key as far as inflation fears being diminished. So very relevant chart, certainly to this week and beyond. So from here, I am going to take a very brief break. When we get back, we have a lot more to cover. So we'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top outperforming growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. As mentioned, I was going to share with you areas of the market that are relatively outperforming, and then share with you underlying stocks as far as what I'm calling the haves and have-nots. So we're looking here at XLC. This is the communication services sector. Internet-related stocks do drive this particular area. So what we can see is XLC just peeking back up into that prior high area. So an attractive looking chart. So from here, I am going to go ahead and share with you some of the names that look constructive. Some of you will know them, certainly one of these names from the MEM Edge report. But here we are. This is Facebook. Facebook actually accounts for, my goodness, well, at least 20% of the weighting in this index, if not more. But more importantly, today, what I'm sharing with you is this very bullish pattern that Facebook has been exhibiting here in a nice uptrend, finding support at that upward trending 10-day simple moving average. And the stock was up about 1.5%. So that's 3 times the broader market as it advances to a new high and very orderly pulling back. This is all about internet related advertising spending as well as other areas of growth. Another big heavyweight name in XLC is Alphabet. This is Google, and also in a very nice confirmed uptrend. We can see the stock is also poised to break out. This move here, I'm trying to think if that was, but they did come out with record earnings as far as ad sales in some of their areas. YouTube comes to mind and elsewhere. So these would be examples of the what I call halves. Basically, the stock is trading above these simple moving averages. Your general trend is upward, certainly your intermediate term with this 50-day simple moving average. And then we can see the RSI trending upward, nicely up above that 50. Your MACD not overly dynamic. Certainly this April period was just a lot more exciting, but I would attest, I would say that it's very much in line with where we are in the markets. There's just uncertainty. So particularly among these bigger names, we're not seeing explosive moves, but nice uptrends. So from here, I'm going to share with you a pretty well-known name, certainly within the XLC industry grouping. And this is Spotify, SPOT. Just really, I'm hoping that quite quickly you can assess the clear-cut difference here. We talked about interest rates peaking back here. There was another phenom that occurred in addition to tech stocks. Generally, these higher multiple stocks that don't have earnings really fell out of bed. So we can see Spotify is attempting to reverse its downtrend. But quite simply, you can see these moving averages. Your general trend is just downward, not unlike this nice healthy period where the stock is trending upward. We can see Spotify. So when you have these lengthy deteriorations, because the stock did get up to that 390, and then it traded down as low as 210. So that's a significant deterioration, and any kind of reversal is not going to happen overnight. Now, from here, I am going to take you to another area on StockCharts.com that can be helpful for you. There's a lot of information here. This is the symbol. Gee, I'm trying to think of the actual name for this, but I can show you where you can, symbol summary. It is on that first page of stock charts. And then from here, you can go ahead and put in the ticker symbol. So what I'm sharing with you is Spotify. It's giving quite a bit in the way of that price range, what the all-time high, and so forth. But a couple of items that I did want to share with you with Spotify. The EPS, we can see a negative number, But more relevant under these fundamental listings here, I wanted to point out that their PE ratio, it is negative, and it is because the company is not posting earnings. So that is hence the deterioration that we are seeing, because the markets at this point in time are not, for the most part, rewarding these stocks that have these high multiples, but no numbers in place. Now let's go ahead and compare this simple summary to a name such as Google, and we can see the same information here. Take a look at their earnings. Very, very strong. We don't have a percent number, but very positive there. And the PE ratio, 31.25. And that is not uh, a lot higher than the S&P 500. We can go ahead and take a look lastly here at Facebook, and another company, strong numbers. Take a look at that PE ratio, 28%. So relatively low, certainly, particularly for a high growth stock. So that's something I wanted to point out to you. Each of these areas are going to have their have and have nots, but there is going to be very clear-cut reasons and relevance. We can take a quick look at Twitter, which is also in that internet related area that is also suffering, trying to reverse negative earnings, no PE. So wanted to share that with you. Let's go ahead, and from here we can take a look at consumer discretionary. I'm just going to start by sharing with you that group chart. And you can see, we talked about this, how this particular area is, for the most part, struggling, unlike the markets. We saw the S&P very close to a new high. So let's begin with areas I call the have-nots. These are charts that of companies that are struggling. First up here is Sleep Number, SNBR. Big winner out of the pandemic. Everyone at home, I know for a lot of this, there's a lot in the way of newer features that these bedding companies are offering, and people really nesting and spending quite a bit on home furnishings, bedding included. So we can see that Sleep Number did in fact fall out of bed. It is attempting to reverse this downtrend. I do have it on my watch list. I'm looking for a break back above this 50-day simple moving average, coupled with more positive dynamics on the outside momentum indicators. But from here, we can take a look at another winner out of that pandemic area that is struggling. This is Marine Max, all about boating. Another big winner out of the pandemic, as people wanted to be outdoors and spend time with their family, and not be concerned with closeness and potentially COVID contamination. But it is deteriorating. This is one area that the company, we can see the stock broke below this 50-day. So any kind of downtrend reversal attempts are being met with resistance at these lower level. This green is that 10-day simple moving average. So moving on, we want to take a look at what I'm calling the haves. First up here, we can take a look. The cruise ships are starting to have test runs. They are going to begin certainly this month on a small scale, and then on into September, where there's an expectation of a significant pickup in these cruise lines. A lot of people already pre-signed up. This is Carnival PLC. CUK is the ticker symbol, and I'm using the London-based Carnival because this particular stock offers a very nice yield. I'm going to pull up the full quote and share that with you. We can see that the company, it's not showing here, but it is a 6.9% yield, and the stock is breaking out of a multi-month base on volume. So we are seeing vibrancy there. Let's take a look at a furnishing stock. This is a smaller one, Haverty Furniture, HVT, another stock. It is now poised to very orderly breaking out of this 6-week base. We have this nice momentum indicator, black line up through the red, indicating that this recent, not necessarily a downtrend, just consolidation, is reversing upward, and then your RSI is positive. So very constructive looking. One other name that we can take a quick look at is Overstock. For those of you that watched the pitch last Thursday, you'll know that this was one of my picks. Overstock, in addition to seeing increased furniture revenues, they also have a strong, they have a department with cryptocurrency. They actually have a brokerage account. They do investment banking, help these crypto firms raise money. But the stock is in a nice confirmed uptrend, finding support at that upward trending simple moving average. I'm going to share with you one other area that we can take a quick look at as far as haves and have-nots, and that's going to be software. We saw that software stocks were in a turnaround. Let's take a look at Oracle. This stock never really fell out of bed with a lot of other software stocks. This week it is breaking out of this nice base. A lot of positive dynamics going on. Caught my eye here is this black line up through the red, that nice momentum indicator shifting upward with your positive RSI. So let's take a look at another positive name in software in line with the group, trading above these simple moving averages. So generally constructive. But on the have-not side, there are a lot of winners out of the pandemic that are just DOA. This is the move as far as higher interest rates, software in particular falling out of bed, really finding upside resistance at these downward trending, simple moving averages, despite actually Twilio had negative earnings, but Coupa, another one, peaked here in price with that high interest rates. Tech fell out of favor. So these are the names that you are going to want, for lack of a better word, to avoid. So hopefully that's helpful. I wasn't able to get to all those groups, but I do want to share with you the move that I mentioned going into some of these defense related. Biden came out and put forth his plans for this area. He is getting rid of a lot of legacy plays there and actually trying to move into more cutting edge as it relates to defense products. So first up, we are looking at Raytheon RTX, and we can see it already has been in a nice confirmed uptrend, finding support at that upward trending 10-day simple moving average. Let's take a look at a name that is breaking out today. This is Northrop Grumman, NOC. The stock gapped up 3% to this base breakout, big volume characteristics. Ideally, this black line up through the red would confirm that base breakout on volume. And then another name that we can take a look at that also had a base breakout today is Lockheed Martin. We can see this black line up through the red, this nice base breakout up here, and a very constructive chart. LHX we can take a look at is another one. So you can see this is one of the very few areas where I am seeing general trending throughout the group. I am going to add a name to my MEM Edge report, so be sure and take that trial for 4 weeks, a very nominal fee. You can get in front of those stocks poised to take advantage of strength and outperform. One other name that we can take a quick look at here is Textron, TXT, and this is another name. I like to see these stocks that are very orderly in these uptrends, having a period of consolidation. I'm going to look for this black line to trade up through that red, and that will signal to me that this period, this recent period of consolidation, is generally poised for further upside. That's going to take us to semiconductors, and Qualcomm is a no. It's finding resistance at that upward trending simple moving average. There are plenty of other names, not plenty, but a handful. Again, take a look at that MEM Edge report. I'll get you in front of those winning semis that are poised to trade higher. And I'm going to leave it at that. Everyone have a great weekend, and I look forward to seeing you here next Friday afternoon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.